Welcome to Home Buying Made Easy, the podcast where we pull back the curtain on mortgages, real estate, and everything the big banks hope you never figure out. Michael Dindy is a licensed mortgage loan officer with Edge Home Finance, and I'm Rachel, co-host and producer of the show. Every episode, Michael and I break down the stuff that actually matters without the jargon. This show is designed for everyday people like you and I to learn the home buying process so you can buy smarter, save more, and stop leaving money on the table. Now let's dive into today's episode.
Welcome to Home Buying Made Easy. I am Michael Dindy, and I'm a mortgage broker, and I also have my handy dandy assistant with me, Rachel, who is also here. We were supposed to film actually yesterday, and at least in my mind, I thought we were. And I was prepared. I had everything set up. We were ready to go. I even had my cup.
Yeah.
I took this cup intentionally yesterday because for some reason, every time Rachel comes to my house, she takes my cup. So
for everybody listening, the studio that we are recording in is in his home office.
This is correct. Correct. It is. So anyway, I got my water cup back. Yeah. I stole it back. I had to steal it back from you. Who stole it?
I don't take it. Like, I use it.
No, but it's in there. And then as soon as it's in there, I'm going to use that one.
I use it, and then it goes in the dishwasher. There you go.
Okay.
Circle of life.
Okay. How is that the circle of life?
Of a cup's life.
Mythbuster Monday. Here we are. It's Monday. It's time for Mythbuster Monday.
Yes.
And what do we have?
Yeah, the myth that we're busting is that you should always choose a 30-year over any other mortgage length, I guess.
A 30-year. Well, there's some falsehood about that, for sure. There's a long history in this particular category. Since houses are so extremely expensive in America, they decided many years ago to extend the length of mortgages to a longer length to make them more affordable. That was their solution. Well, by making them more, quote, affordable, a 30-year, when they came out with a 30-year, by making them more affordable, it added a lot of interest because it's amortized over 30 years. Amortization means that it's spread out over the course of 30 years, but they didn't amortize it evenly. So they didn't say, oh, well, the interest rate is this. We'll just split it over 30 years. They front loaded it with all the interest.
Yeah. And
then it slowly, as it progresses throughout the 30-year process, the interest is, the amount of interest that's paid is a lot lower. There's a point in the amortization where the interest flips, meaning you're paying principal and you're paying interest when you're paying a mortgage. The front loading side of that, like your first month on a typical, let's say a $200,000 or $300,000 mortgage might be $100 or $150 that's in principal. The rest of the payment is interest. Mm-hmm. So the reason I'm giving you this background on this is because in the event that you go for a 30-year, this is what you're going to experience. So if you look on page 3 of your loan estimate or your closing disclosures, when you're getting a mortgage, you have these documents that we give out. When you look at that on page 3, you'll see what's called a TIP, T-I-P, total interest paid. Well, the total interest paid is a percentage and a number. So if you have a $300,000 mortgage that's going 30 years, your total interest paid might be $500,000 or even higher, because the rest of that's interest.
Yeah.
And you have to pay back the mortgage. So if you're paying back a $300,000 mortgage, you got that plus the interest. So what happens is when you adjust that from a 30-year to, say, a 15-year, the total interest paid is a lot less because it's compacted. And it's not compacted. People always ask, well, then my payment's going to double. No, your payment's not going to double. Your principal will go up because like we're in a 15-year mortgage, and our 15-year mortgage is like the very first month that we paid, it was almost split evenly between principal and interest paid.
Mm-hmm.
So I paid the payment, and then the payment was almost equally split because there's such a shorter length of time. There's only 180 months to amortize rather than 360 months.
Right.
So, yeah, that's kind of, I don't know if that's a myth. You should not always choose a 30. If you can handle the payment of a 15-year, I would say do that. If you can't, do maybe a 20-year or a 25-year. You'll really cut down on your interest by not going to a 30. There's people that are actually refinancing some FHA loans, I believe, that can be refinanced into 40 years.
Wow.
And it's only for certain situations, but that's a lot of interest being paid.
Long time.
That is a very long time. Another interesting note about this, I find it interesting. I have people that call me sometimes, and I had a guy that called me about maybe 2 months ago, and he was 89. And he said, "Can I even get a mortgage?" I'm like, "Sure. I mean, if you have good credit." And he's like, "Yeah, I got good credit. I just didn't know if I could get a 30-year mortgage. I'm 89. I'm like, "Well, it's against the law to discriminate against anybody for pretty much anything, but certainly age is not one of those things that you're allowed to discriminate against. If he can afford it and he can make the payment, and we can prove that he has the income and he has the assets, the bank money in the bank to make the down payment, there's no reason he can't get a mortgage." So that's just an interesting note. He got a 30-year mortgage.
There you go.
And he's 89.
Yeah. Dreams come true at 89 years old.
Yep.
Okay. So talking about interest rate for, let's just do a 15-year versus a 30-year comparison.
Okay.
How much more, like, for interest rate are we looking? Like, what's the interest rate difference?
The interest rate difference between a 15 and a 30? It depends on the markets and what the markets are doing. So I would say the average difference is about a point.
Okay.
So if 30-year rates were, let's say, 6%, or if 30-year rates were 5.75, 15-year rates are probably about 4.75, right around that. That's just a ballpark, though.
Yeah.
Don't hold me to it.
Yeah.
And there's a lot of disclaimers that need to go right there.
Yeah. Well, we can't do it when they're listening to it. Disclaimer.
Okay. Disclaimer. You know that
Yes.
car
Yes.
disclaimers with all the, that's what
Or
I just
the
did.
like medicine, the
medicine.
drugs.
Yeah. Hey, be careful. The Trump administration, I don't think it was Trump administration. I mean, I think it was pushed with the Trump administration, but the actual federal government decided they wanted to try to come up with a 50-year.
Yeah.
There needs to be a medical disclaimer to that. Okay.
Yeah.
In the event that you choose to get a 50-year mortgage, you will be paying for your mortgage for 223 years. It will take that long, and you will likely have multiple stomach problems from anxiety of paying this mortgage for this length of time. Do not take it for granted that you can buy a house. You can't even buy it with a 50-year right now. They just released it that it might be a thing.
Yeah. Yeah. So, okay, back to...
Sorry, I need a disclaimer.
Okay, we got our disclaimer. Listeners have been disclaimed. Okay, so if somebody, let's say, gets a 15-year and then they kind of run into some trouble of maybe like a spouse lost a job or like some type of financial thing, medical bills, it could be whatever. Can you, in that instance, refinance into a 30-year for a lower payment, or is that not a...
Yeah, you can always choose to refinance. And I mean, as long as there's no, there's some mortgage companies that have prepayment penalties, but as long as there's no prepayment penalties, you can always refinance. So if you wanted to go back to a 30, you could. You can't just raise your hand and say, okay, I'm tired of paying the 15-year. I want to pay a 30. Can't do that. You have to refinance.
Yeah. Yeah. Okay. Well, that's all we got for today.
All right. So if you want more information on 15 years or 30 years or anything in between, a 24-year or anything like that, you want to see what it would take to refinance or just get some numbers put together, or if you need a second opinion, all you have to do is reach out, give us a call, shoot us texts, send us an email. We'll be glad to help you any way we can. We'll see you next time.
That's a wrap on today's episode of Home Buying Made Easy. If you're ready to take your next step, our team is standing by. You can call or text us directly at 615-499-6335. You can also reach us at michael@dindyteam.com or check out the link in the show notes below. Whether you have one question or you're ready to go, we'll meet you right where you are. Thanks for joining us. From our team to you, let's make home buying easy.